Good morning, everybody. It's Wednesday, June 12th, 5:25 a.m. Central Time. Grain markets are mixed this morning. July corn futures up 3.25 at 452 and 3/4. July soybeans up 5 3/4 at 1183 and 3/4. July Chicago wheat down 7.5 at 619. July Kansas City wheat down 9 at 646. July spring wheat down 6.25 at 672.5. Let's start off with the soybean sales to China.
So, USDA reported a flash sale of soybeans yesterday. U.S. exporters sold 4 million bushels of soybeans to China for delivery during the current marketing year. This is the second flash sale of soybeans purchased by China in the past week, totaling 8 million bushels. Some analysts believe that a recent Brazilian tax change caused these Chinese purchases. Recent policy changes in Brazil limit the ability of exporters to monetize some tax credits, resulting in higher export prices.
These are the first U.S. soybean flash sales to China since January. So it's been a while. They're not huge amounts. The working theory among traders in the United States seems to be that these purchases, if they continue, will continue to be small. I think people believe these will be shipped out of the PNW ultimately because freight to China is cheaper than it is out of the Gulf. So I think the trade, at least in the United States, seems to believe that this is kind of like a non-consequential deal and that it's probably not going to amount to much. Now, Bloomberg had this article yesterday, and Bloomberg seems to believe that, and an analyst that they quoted says that these flash sales are the direct result of the Brazilian tax changes, and that may very well be true. This is what one analyst said. China is buying U.S. supplies because buyers in Brazil cannot pass along those higher costs to the farmer. They, China, are paying extra because offers in Brazil are reduced. So I think this Brazil story was out last week, and maybe it does have the ability to generate a little bit of extra demand. But at the end of the day, Brazil's got a monster soybean crop, and a lot of it's going to be shipped to China. So I think that we're in maybe kind of a state of flux here where you're going to see some back and forth. But I have a hard time believing China is going to come to the United States for soybeans in a really dramatic fashion. They still haven't bought a single cargo worth of new crop beans. I hope I'm totally wrong about that and that this is a big shift in the situation.
So, USDA will release its monthly crop production and WASDE report this morning at 11 Central Time. USDA typically leaves its production estimates unchanged in June. Some demand adjustments are possible, however, on the U.S. balance sheets. The South American production numbers and also the Russian wheat production numbers will be closely watched by the trade. USDA has had larger crop estimates compared to its foreign counterparts in both instances.
Running through the pre-report estimates here, you're not looking for a ton on the U.S. side. Maybe you'll see some demand adjustments. Maybe the soybean export number comes down. They're not looking for much at all in wheat. When it comes to the yield numbers for the United States for this year, USDA typically leaves them alone. There's been a handful of times over the last 30 years that they've come down with the corn yield number. I just don't know if it's warranted this year. I mean, we started off planting late. Now we're back to normal. Crop conditions are really good. I don't know that there's enough to justify a yield reduction right now, but never say never. Anything's possible. The world numbers, I think, are probably going to be more important today. That would be my guess. You're looking for lower South American production numbers across the board. Brazilian corn, Argentina corn, Brazilian soybeans, Argentina soybeans, all of those are expected to be lower versus last month. That Russian wheat production number, USDA has at 88. Its counterparts, or call them private entities in Russia, are in the low 80s, like an 80, 81. USDA is not going to come down that far, I don't think. Maybe they'll come down to 86 or 85, somewhere in that neighborhood. You've also got some issues with the Chinese soybean import numbers, which I think some people would argue are too high. USDA's got something really high penciled in for new crop, and maybe it's too early to make a change there. So this report, I think big picture, should be, and I'm not going to say there can't be a surprise, but it should be more of a placeholder until we get to June 28th, which is planted acreage. That one is a big market mover historically.
So, if you guys have not checked out our premium content, you need to do so. You will not find content like this anywhere else. Joe, can you tell me about yesterday's video?
My friend Lewis Stearns is a agronomist in Ohio, but his firm does crop scouting and agronomy all across the Corn Belt. He was on yesterday, and he talked about some of the problems with the U.S. Corn Belt. So when we come on the podcast, Mackenzie, every Tuesday, people like bitch and moan at me about the crop ratings, like I came up with them, and I didn't. But we had we had a totally like different kind of take on the crop situation, and there are some issues with the corn crop. Absolutely. What are the issues? I don't know. Watch the video. I thought it was really interesting. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. There's no other fee. There's no other obligation. Nobody will try to sell you anything else. As I've said in the past, we don't want to do your grain marketing. We don't want your futures and options business. We don't really even want to talk to you at all, to be honest. We just want to sell you a $50 per month subscription, which includes all these premium videos, all of my cash grain marketing recommendations, which are very, very specific and transparent, easy to follow. This is the best way to support what we're doing here. We don't have sponsors. We don't have a corporation backing us. Farmers and subscribers allow us to do this every day. So check that deal out today, guys.
The U.S. Corn Belt will stay mostly dry during the next 72 hours. Rain is slated to return this weekend. The 3 to 5 day period should bring 1 to 2 inches of rain to northern Iowa, southern Minnesota, southeast South Dakota, eastern Nebraska, and western Wisconsin. The 5 to 10 day period introduces even more rain for many of these same areas, while leaving Illinois, Indiana, Ohio, Michigan, Kentucky, and Tennessee much drier. The 6 to 10 and 8 to 14 day government maps continue to favor odds of above normal temperatures. This morning's GFS is again back and forth with above and below normal temperatures through the 16-day period.
The forecast is, I'm not going to say odd, but there's a big discrepancy between, half the Corn Belt. You're looking at Illinois, Missouri, Indiana, Ohio, anywhere east of there, pretty dry through the next 10 days. And then areas to the west and northwest, Wisconsin, Iowa, Minnesota, Dakotas, eastern parts of Nebraska, Kansas, much wetter. So what does this mean for crop prospects? I don't know. You've got a Corn Belt that's basically split in half. Half's going to be wet, half is not going to be wet. And you've got the probability of some warmer temperatures. If this were a situation where there was maybe some drought in place and we didn't have this big soil moisture recharge, maybe the market would care about this. But it seems the marketplace seems very much disinterested in what looks to be a very, very dry and perhaps warmer forecast for the eastern and central parts of the Corn Belt in particular. Some of these areas that are going to catch the rain, like some of the amounts that they're talking for southern Minnesota, and I know parts of Minnesota have been excessively wet. This could be too much. It could be too much in some of northern Iowa and southern Minnesota in particular. If you guys have thoughts on that, if you're in those areas, drop me something in the YouTube comments here.
Russian crop losses are worse than previously estimated. According to the head of Russia's grain union, 15 to 30% of the country's winter grains were damaged due to May frosts. The estimate is much higher than the Russian Ministry of Agriculture's projection of 1.2%. Last week, Russia declared a federal emergency in 10 regions due to the damaged crops. The declaration is not expected to impact Russian grain exports. Russia's ag ministry is forecasting this season's grain harvest at 132 million metric tons, while agricultural consultancies ICAR and Sovicon estimate the crop at 81.5 million metric tons and 80.5 million metric tons, respectively.
Wheat was able to rally yesterday, and maybe it was on this news, but maybe it was just because the market had been down for 7 or 8 days in a row and lost $1 per bushel, and you needed some back and fill type action. It's old news. I mean, we traded this news 2 weeks ago. When it comes to wheat production in Russia, you do have some rain on the way, but the 72% of the winter wheat crop that is in the ground now, it's probably too late. Even if they catch the rains here forthcoming, it's probably too late. 28% of wheat production in Russia is a spring wheat crop, and that crop can very much be helped by any sort of rain that's in the forecast. So you've got kind of a split deal here. Does USDA come down today? I think they should. Maybe they don't. They slow play this stuff. If they do come down, I don't think it's going to be by a lot.
Today's CPI report is forecast to show consumer prices leveled off in May. On a monthly basis, consumer prices are anticipated to show a 0.1% increase, down from a 0.3% rise in April. Year over year, prices are slated to have increased by 3.4%, which would be steady with April. The report is expected to show that the surge in inflation earlier this year was overstated. It's unlikely that the data will cause the Federal Reserve to make any quick moves on interest rates. The report will be released here this morning at 7:30 Central Time, and then later today at 1 o'clock Central Time, the Fed will release its policy decision from its June meeting.
CPI reports are still very important to traders in the outside markets, your equities and treasuries, that sort of thing. We've kind of leveled off, though, and I feel like they're not maybe as important as they were a year ago. We've let the degree of inflation has leveled off and is still kind of sticky in this like 3 to 3.5% neighborhood. Treasury markets or interest rates, they've been kind of in a tightish range this year. 2024, the 10-year has been 3.8% up to 4.7. So it's traded a range, but it's kind of consolidated after the big spike. When you look at the stock market, it's acting very well and doesn't seem interested in this Fed thing either way. I mean, you see your day-to-day action sometimes as the result of what one of the Fed heads says or one of these meetings, but the trend has very much been higher. And the S&P posted fresh all-time highs just yesterday. So maybe the CPI impacts that today. Maybe it doesn't. What did cattle do yesterday?
They softened a bit. Feeders were an average of 99 cents lower. Live cattle closed an average of 46 cents lower. Box beef continued its upward trend. Choice ended the day at $318.21. That was up 79 cents. And Select ended the day at $300.62. That was down 42 cents.
Outside markets on Wednesday, U.S. dollars about flat. Stocks are marginally higher. Bonds are flat. Crude oil is up 94 cents in the July WTI at 78.84. Have a great day, guys. Remember, report at 11 a.m. Central. We'll talk to you on Thursday.